Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So today's lesson I think is interesting because we take the signals that I talk about on monthly, weekly, and daily trades and apply it to an intraday time frames on the S&P. And I want to show a great example that really covers almost all the details from my book and my course. And so let's go ahead and get into this agenda. So what I want to do is show an intraday trade of the S&P, and I'm going to use MACD and ADX in detail. I'm going to give a lot of detail on MACD and ADX on this example. We're going to use a 60-minute, 10-minute, 2-minute. I like to use time frames. When I look at the ratios between the time frames, I like it to be somewhere around 1.1 to 5 or 1 to 6, something like that. Now, when we do a trade like this, you have to recognize the positives and the negatives. And really, whenever you do a trade, you should recognize whether there's any negatives to the trade. Not all trades are going to be perfect. You have to look at them, and then that helps you determine how to handle the trade if you're going to take it. And then finally, I just want to make sure you understand we're going to use MACD and ADX together. But essentially, when I'm looking at this type of trading intraday, I want to use ADX to complement what I'm seeing in MACD. All right, once we're done with that, we're going to go through the individual stock requests that came through. Let's go ahead and get going with this. All right, so I've got my 4 time frames up, but I'm using the daily in the bottom left, hourly in the bottom right, the 10-minute in the upper right, and a 2-minute in the upper left. All right. Now, what we want to look for are these exact same type of patterns that we look for on the higher time frames. And in fact, when I started doing this, I was finding these on the small time frames like this, and then I started to realize that it could be used on the bigger time frames. So let's just look at this example of on the hourly and how we get a really strong move to the downside. We get a rally. This was when the Fed was speaking, and then we get the decline, have a pretty strong move, confirmed by MACD, confirmed by ADX, and confirmed by DI. All right, and then we get a 3 to 4 bar rally back to a declining 18. Now, there's a couple things about this rally and about the position of this that suggests that I need to be quick if I'm going to take this trade. It's a pretty quality trade. There's a couple things that I really, really like about it. Number one, green bar, green bar, green bar, green, 4 green bars in a row back to a declining 18 after confirming evidence on all these indicators that there's a pretty high probability of some form of a test coming back down. However, on the rally, it was pretty strong. We had the bottoming tail and then pretty good 3-4 bars to the upside, and that caused the MACD to cross over. Now, I think what this is telling me, when you get this combination where we confirm to the downside and then we rally up strong enough to cross this over, it doesn't mean that it's going straight up. All right. I think this is telling us there's enough weakness, especially when confirmed by DI, that we're going to get some kind of a test. Normally, what I'm expecting is a 50% retracement. In this situation, I'd be thinking coming back down to the upper end of this bar. A lot of times it's the midpoint of this big bar, of this bottoming bar. But in this case, because it had a strong move to the upside, I'm thinking, somewhere in this area. Now, it overran it a little bit, but basically that would have been the target if I'm trading this, especially using the smaller time frames. I'm saying if I'm going to get in up in here somewhere, I've got to get out through here, and I've got to be out by the end of the day. So that's what I'm thinking when I see this MACD situation where we cross over. It doesn't eliminate this as a possibility. Now, what ends up happening in a lot of cases, we work back up and test this high again, and then we could come down and actually come and break down below this low ultimately if the rally isn't that strong. So we could come up and do something like that. And as long as we're not seeing any deterioration in the price action or anything like that, then we could play it. Now, part of the reason why I'm questioning that is because, look at this, is not really parallel. You see how this is going at a much faster rate than this? So these are the couple things that are taking place. Number one here, this, and the fact that this is not parallel, that has me thinking I can play this for a move, but I need to be quick. All right. Now, You have to have this in the back of your mind, because then that tells you exactly how you're going to manage the position, and how you're going to look for targets, how you're going to take targets. So we've got this rally up that took place around 1 o'clock, and we can see the peak of that rally up on the 10-minute up here. So we look at that rally. All right, let's go ahead and zero in on this time frame, because what took place here is we had a strong enough move to the upside that caused the 18 to cross above the 40. That's what we're looking for, this counter trend type of a pattern. But it also caused the MACD to completely overrun the zero line. Both lines, significantly above, in fact. Now, when I see that, the first thing I'm going to look at, I'm going to go down and look and see what is going on a DI basis, what's going on an ADX basis. If this ADX blue line is crossing above 25, then I'm probably not that interested in this trade, because I know it's a short-term trade and I needed to trigger quickly, because I'm only going to be in and out by the end of the day, and it's already 1 o'clock. And so if that takes place, then it just X's out and says, okay, I'm not doing this trade. However, in this case, we had the strength in the MACD, but we did not have any real strength in the buyers. The buyers didn't cause the ADX line to move up. The green DI only popped up for a quick second above the 25 line, and then it dropped back down below. So this is still in play, in my view. All right, but we need a good trigger. And because this overran, I don't really want to just take the first crossover of the zero line, of the signal line, or a trend line break or anything like that, or even an 18 MA break, or even a 40 break. I'm probably looking for something a little bit more. I want the 2. So if the trend line break is the 1, the 2 would be kind of like making a test and a failure test. So this is the 18. We break below it, we bounce off the 40, and then we rally up to the 18, which is now rolling over. This is the failure test. If we fail here, then we have a chance of making a little bit of money over the course of the next, 30, 40, 50 minutes. We're not talking about being in this for a very long time. Remember, this is a 10-minute chart. All right, now, when this is rallying, a lot of times what I'm going to do, you could play it just off of this time frame. You could definitely do that. And with the moment so we've got a higher bottom, higher bottom, higher bottom, higher bottom. The moment we take out and make a lower low, inner bar, as soon as that happens, we can take that and put a stop here. We can do it that way. However, what I like to do is I like to take it down one more time frame and look at the 2-minute. Now that's during this. So when we're making higher lows, we're making these higher lows here. That's showing up as these higher bottoms on the 2-minute. And I can draw in a trend line right here. And now the reason why I find value in going down one extra time frame is it's telling me, is this going to happen quickly, or is it going to take a little bit of time? And if you notice what happened, we only got to the zero line here and we had low ADX. This is the exact pattern I'm looking for on the upper time frames. In a lot of cases, it's happening on a 2-minute chart. It's telling me this is going to happen in the here, in the now. We're not going to have to wait. If we can get this trend line to break, we can put that trade on. Now, our stop's going to be in the same place because there wasn't an intermittent lower high or anything like that. So it doesn't add value. So look at this. We're getting in at the same, well, it's about the same price, maybe a little bit better pricing when you use the 2-minute. The stop's going to go at the same place. What is the 2-minute actually doing for me? It's giving me so much more confidence that this is going to go, because I've got a zero line reversal, I've got low ADX, and I've got a reverse divergence pattern. All of that is giving me that much more confidence to saying, you know what, this pattern is going to trigger. It's going to take me to the downside. I know I've got room down to this support level down here, and you can really see it on the intraday chart. So this is one thing I wanted to mention. When we're trying to determine the targets, we want to just look at, okay, this was a key support level, it looks like, and this is a key support level. In between there, maybe a little bit of turbulence in here, but really I'm looking at these bottoms. Once we turn this trend, then I'm kind of looking at these bottoms, and I'm saying, once we break this, we've got a little bit of an air pocket to here. That's really the target area. Now, we didn't quite reach the low of that area, and we ran out of time. But we certainly should be taking targets after 1, 2, 3, 4 red bars in a row to the downside on an intraday trade. And then, you'd have to close it out by the end of the day if you're trying to get more. So this is how I would go about looking at multiple time frames and showing that the markets are fractal in nature, because this is happening on an hourly, 10-minute, and 2-minute. And a lot of examples I'm using are monthly, weekly, daily. So keep using these strategies on all time frames. And when the volatility is high, a lot of times the best strategy to use this on is on an intraday basis. If you're enjoying the content, hit that like button and also subscribe. My research can be found at rabilstockresearch.com. If you have an interest in get started, my recommendation would be to start with the book. I'm offering at a discount right now in an ebook format. You can go to rabilstockresearch.com/book to get more information on that. All right, let's go ahead and get into the individual symbol requests. So I'm going to start out with the S&P this week, but I'm going to talk about a longer term time frame. I did this about a month or two ago, actually on your daily 5, but I thought it was worth following up. Let's just start. So I've got a yearly chart, yearly bar chart in the bottom left, okay, quarterly in the bottom right, a monthly upper right, and a weekly upper left. Let's start with the yearly bars. So we can see what's taken place here. We've just gone, and when I do this analysis, my suggestion to you when you pull up a chart like this is to think about this as if it's a daily chart, okay? If you look at it in those terms, I think it helps with your analysis and your understanding of how important these levels are and what's taking place. So we've made this huge run from the bottom in 2010, huge move to the upside. Last year was the first year we closed below this 4 MA through that whole period, okay? Now, we haven't taken out the low of this bar, and we have not rolled this bar, moving average over yet. But if you look at what's taken place, this was the biggest bar in the move after this huge run. It makes total sense that we're going through what we're going through right now. Big red bar to follow. So big greenie, big red bar. It's a big 180 reversal, a bear reversal, whatever you want to call it, bull bear bar, king queen, anything, I see it all these different ways. So typically the midpoint of these two big bars become pretty important. You can see we actually made it through the midpoint of that before giving back and breaking back down below. So I do think there was a pretty good strength in there, and I'm sort of thinking that maybe we end up range bound a little bit, as opposed to this looking like a big top and we have to come all the way back down to the 18. I mean, I think you have to keep that open as a possibility just based on how big of a run this has made, but I'm not looking for that. I'm really not. And the thing is you really don't have to play for that. So we start with that as kind of our background. Now, what I thought was key and something that I discussed a few months ago was how this was setting up on the quarterly chart. We had the pullback to the 18 on the quarterly. You see how important this line is? We pull back near this line and we get rallies. But we got a little stretched away. So we had a pretty harsh down move, harsh enough to cause the MACD to cross down for the first time since this bull market started, right? So this decline, this bear market caused the MACD to roll over. Now, that doesn't mean we're rolling over and going all the way down to the zero line necessarily, but it does suggest, and what I said when we were here, is that, yeah, we could take a little bit more follow through, but we should come back and check back. Whenever I see this on a daily or a weekly chart, I'm looking at a move back and some kind of a test like this. So that's what I'm thinking now. Now, when I look at this, it looks like the 4,000 mark becomes pretty important, especially if we look at how this moving average is coming up underneath. We did make it through this big red bar. So the idea is that we consolidate a little bit here, maybe pull back a little bit, but I don't know that, again, I don't know that I'd be on the lookout for something like this right now. Once again, we don't need to make that decision in advance. We just keep these things in the back of our mind, know what the key levels are, know the fact that we were just up 3 quarters in a row, had a reversal quarter, and now we're turning down from that. It just improves the odds that we want to pull back a little bit. And now we get into the crux of the matter. Now we're on the smaller time frame, monthly, smaller time frame. All right. So if we look at the way this has played out, again, we crossed the 18-month, as I've been saying for about a month or two. We crossed this while it was declining. It makes sense that we come back and check back. Now, there was two ways it could play out. It could just go sideways while this cupped around, or we could do what looks like we're going to do, which is come all the way back down to this 18. This will be incredibly important, and it'll influence how we view these two charts as well. How do we react at the 18 and the 40-month moving average? If we can survive that, then I think we're okay. Like this is in a decent position for maybe a move back up into resistance again. If we break that, then you got to start thinking we're in some kind of a huge range, and this could go on for quite some time. So we've got a really key level that we're coming down to that we got to be on the lookout for. Now, one thing that I'll mention here is that we've had all this weakness. We've had this ABC to the downside on the weekly chart. We're getting this MACD down closer and closer to the zero line. So we want to be on the lookout as we work into this 41 to 4,200. Well, we're through 4,200. So we're looking more at 4,100 and the 18-month line. We want to be on the lookout to see how this MACD holds. We also kind of want to see a little bit more bearishness. I was a little disappointed this week when I noticed that there were not that many more bears and there were not that many fewer bulls. So I like to see the sentiment in this type of situation start to flip more bearish. And I think if we get that, we could have a lot of support at 4,100. Something to watch for, but the 4,000 mark seems pretty key from a bigger picture standpoint. All right, let's go ahead and take a quick look at the QQQ. Still in the same boat. We're still in a corrective pattern. We've rolled the 18-week over, and the MACD is trying to work its way back down to the zero line. Okay, now if we look at this chart up here real quick, this sort of tells the tale. You see how this line was broken? We broke this line and we're rolling it over. The next line of support is way down here. We have this air pocket. There is some risk in this index, I think. I think there's risk in this index simply because look at how far away we are from the 18-month and the 40-month lines. We have a little bit of room, more so than even the S&P really. All right, so we need to be a little bit more careful about trying to dive into some of these stocks that are down for the first time in a while because they could end up going lower. I'm talking about some of the bigger names. So I'm going to get into a few of those in a minute. All right, let's look at the IWM. So this did not hold the 170 level, and it continues to move lower. Now, there's a couple things going on. The daily ADX is still pretty strong. We're still not showing that much strength on a weekly basis, so I'm inclined to believe we've got some support coming up down here that, yeah, maybe we undercut that, but then we probably turn back up. I don't know that this is in a position to break down and follow through. It could undercut it, and then we could be on the lookout for a rally. But the daily chart is showing not to be looking for anything significant to the upside right now. We need more. It needs more work, clear downtrend in place, and but we are getting pretty oversold in here, probably due for some kind of a rally. All right, let's look at GLD. So I do like the looks of this. I got a request on this, and I like how this played out. We overran the 18-month line a little bit, but if we look at what took place on a look at this was a pinch play. You see how this held on the monthly MACD? And also, I'm watching this on all of the indices. I want to make sure that green DI stays above red. I prefer that in this situation. If they crisscross, it's kind of like the MACD crossing down through the signal line. It just weakens the strength of the trend. But that did not happen here, and we have bounced off both of these moving averages on the monthly. And if you look at this chart, it has a pretty nice look to it. I mean, this is still in play for sure. I think if we get any kind of a little check back, pull back, I would consider that something worth investigating, worth looking at. Okay, let's go through a few of these stocks that got beaten up. Now, if you go back through one of my I did a lesson on DI lines about a month ago, and I used this as an example. And what I was saying at that point was that the red DI was making lower high, lower high, lower high, lower high. And I said, if we can make a higher high, it's an early warning sign. Okay, so that happened here. And then we made one more last gasp, like a little divergent pattern on the MACD. And now we started coming in. But this is one of those early warning signs we want to be on the lookout for. So now we're in this correction mode, and we can see we've got some support coming up underneath. But do we want to be in a big hurry here? I don't think so. I mean, let's just look at where that level is. I would say somewhere around 116, 118, somewhere in that zone. So that's not that far away. The problem I've got with this is time, because we just broke the 18-week here. It's just starting to flatten out. Typically, when we break an 18-week and we're above an 18-month like this, I look at a 2 to 4 month process of recovery. So we break it, we stay below it and we stay above here, but we're below this one. So you're below a declining 18-week and you're above a rising 18-month, and you just channel for 2 to 4 months. So don't be in a huge hurry to come diving into this type of pattern. All right, let's look at META. So what did I just say about Google? We broke the 18-week for the first time in this move. This is a very violent one, confirmed by the MACD failing. This was actually a counter. Out of my course, I call this counter parallel lines, where we've got these lines moving up, right? Almost like a bear flag in a way. And these are going in the opposite direction, acting as an anchor to the momentum. Now, I do think there is some support here at 275. I don't know that it's just going to go nosediving through that, but this is more of a time issue. It might bounce, come back down, trickle back down through here while this 18-month is trying to catch up. This just got too far away from this 18-month line. It needs to spend some time. I think time is the issue with this. This MACD needs to work down closer to the zero line. Okay, let's look at UAL. So there were a couple questions on some airlines. I just figured they all look very similar. This is coming down similar to what I was talking about with the IWM. You see how this has come all the way. Look at how extended it is from these two lines coming down to try and break down. I think if we undercut that, then you could look on the smaller time frames for some kind of a trade potentially, all right, because we're so stretched away. But I wouldn't jump the gun. One of the things that did catch my eye, and let me just zero in on this for a second. So look at this steady drumbeat of decline, and then the biggest bar in the move again is right here. So we're getting really close to some kind of a low. I think we get a little overthrow from this big, overthrow it a little bit, and then maybe look for some kind of a retracement rally over the course of, say, the next few weeks to a month or something like that. Okay, let's look at LKNCY. Pretty good looking pattern overall. The momentum signs are pretty good. We're pulling back on the 18-week. We did have a little topping tail up here. So I wouldn't be looking at this as being real quick necessarily, but the momentum signs are really good. It's just when I look at the daily chart, it doesn't look like it's quite ready yet. I would think that the 18 is going to cross down below the 40 just based on the price pattern. It doesn't look like it's going to happen quickly. So maybe this comes down a little bit more and causes this to drop down. Then we can look for one of our triggers at that point. Okay, let's look at WM. So this was a great question. We have on the monthly chart, we have this taking place here. All right, there's reverse divergence, similar to the reverse divergence that the person who brought this up pointed this out, a reverse divergence this way. Okay. He also pointed out correctly, I will add, that the difference between the weekly now and what it looked like back then is completely different. This move back here was strong and the pullback held the zero line. Do you see that right here? So we wanted to really be thinking hard with that pattern developing right there in the reverse divergence and the strength and the momentum and everything. Now look at what we've got right now. We're not respecting the zero line at all. We're going below, we're going above, we're going below. So when I see that, I'm thinking range, trading range. So if you want to play it off the short-term time frames, you could do that, but you're probably capped out up at this upper end of the range. So that's how I would look at this. I don't see this as a long-term play right now, but it could be considered on a short-term basis. Okay, look at this URA. Now, One of the things that I really recommend is in this kind of environment is try and find relative strengths. You want to look for areas that are holding up. That's this black line that are showing signs of improvement where this line is climbing. All right. But there's also independent movers. All right. This looks like an independent mover. It doesn't really care what the market does. In fact, a lot of times when the market's up, it's down. And it doesn't seem to matter. Now, today it's down with the market, but what I'm telling you is that this big pattern that's developing in this huge base, it's so different than anything else that's out there. I think if you focus your efforts on this type of pattern, you're going to be a lot better off. You just have to be careful about your position sizing right now until we get a little bit more solid support on the market. Thanks for joining me today. If you have any stock requests, send them to stocktalk@stockcharts.com. My YouTube channel is called Invest Like a Pro. Have a great week, and we'll see you next time.